What's up, everybody? I got Joe Ebanks with us today.
Yes, sir. Yes, sir. We're going to let everybody kind of get in here. We'll give it a minute and then we'll get started. Gonna blow your mind today with a little bit of credit hacks. How to get this business credit with no PG, no personal guarantor.
Calm down. We're talking about something totally different.
What are we talking about today?
Today, we're going to talk about how to get business loans even with bad credit, no collateral, or no cash flow. You got the topic there?
I got it. Say it again. No.
Say it again.
No, I'm joking.
Okay. So what do you expect to get from this webinar we're doing today? What do you expect to learn about this? Like, we're going to tell people how to do it if they got bad credit, no collateral, no cash flow. Like,
yeah, I mean, we're just kind of going to really give you guys what we didn't have with all the several businesses that we've owned, and now we have this information. So we're just going to share it to the masses. I mean, that's really the main thing we're trying to do with everybody right now. And please make sure you guys hit the like button, the subscribe, share it live for anybody you think this would benefit. Let's get it in. How many people do we have in so far?
All right, so we're just gonna go ahead and get started. We're also recording it, so it'll be on the page.
All right, cool.
All right, so basically, there's the cash access problem. Everybody got cash flow problems when they're starting out a business.
Yes, sir.
Even if you don't, and you start your business and you have a little bit of cash and things are rolling, and one bad thing happened, next thing you know, you're struggling to get cash. So let's talk about the cash access problem. Most business owners go to their bank. Uh-oh, what's happening here? When they need money.
Yeah, we all make that mistake.
But according to the Department of Revenue, less than 2% of all business loans come from big banks. So less than 2% come from big banks.
I mean, the bank ain't loan you should.
You got to behave today. Oh, turn the phone off. Banks deal with very conservative risks. And business lending is very risky, as over 90% of businesses fail within their first 10 years. So the result is that 89% of business bank applications are typically denied per the Small Business Lending Index. This is also why Bloomberg says funding a new small business, don't bother with the banks. Even though most struggle to get money, 86% of small businesses rely on some type of credit or financing for survival, per the National Federation of Independent Business. And per the SBA, the major reason that business failure is insufficient capital and lack of inadequate funding, right?
Exactly. So I can tell you from the several businesses that we've owned, I remember going down to the SBA, filling out paperwork, talking to the people they say you are supposed to talk to, and trying to apply and get these loans, when it just seems so out of reach after several times of trying.
Fill this out, deny, come back, do this.
Yeah, do this, try this, try that, and it never works.
And you, one of the 9 million who need money, can't get it. If so, you're gonna love what we're about to show you guys today, because there are different ways to get the money. So if you're looking for money for your business, there's great news. Did you know there are billions of dollars to be lent to small businesses?
Billions.
But most of this money will not come from the big banks. The real problem isn't that there isn't money to borrow. It's that most business owners don't know where to go get approved, which, you know, we had that issue. Remember when we ran our landscaping company? Oh my gosh.
Absolutely.
So let's talk about conventional financing, SBA loans and qualifications. All the big banks and most smaller banks use SBA loans as their primary business funding program. These type of conventional bank loans are very hard to qualify for, as the borrower must qualify per SBA guidelines and the lender's guidelines,
which you can never meet.
So SBA loans are tough to qualify for because the lender and the SBA will evaluate all aspects of the business and the business owner for the approval. To get approved, all aspects of the business and business owners' personal finances must be near perfect to get approved. And when is that ever the case? When is something ever near perfect?
Yeah, well, I mean, what they don't tell you is they don't tell you all the steps that you need to do as far as forming your company and all the steps behind the scenes that you already need to have done in order to even qualify for this stuff, which we now have the formula for, which she's gonna go through and tell you right now.
Okay. So to get approved for conventional loans, You must have excellent personal credit with no derogatories reported or items on your credit, excellent bank credit, keeping over $10,000 liquid in your accounts, and excellent business credit with a paydex score of 80 or above. So that's conventional.
Conventional.
You'll also need to have excellent financials that show good net profits increasing from year to year. You need to show you can manage the cash flow good per your business and personal bank statements. And you'll need substantial collateral to offset what you're borrowing, sometimes equal to 100% of what's being borrowed. You see how stickler these rules are for conventional? And then other items they're going to ask you for. They're going to ask you for.
And who the hell is just starting a small business has all this stuff?
Right. And then they're going to ask you for a profit and loss statement. They're going to ask you for your current and projected financials. Can y'all see my screen? Can you see my screen? Oh, looks like you can't see my screen.
Can you see us? Oh yeah, I guess you can see us.
It's still little. Why isn't it big?
No, you can see it. You good.
It's big now?
Yep, it's big now, yeah.
All right. So your profit and loss statement, it got to be current within the 90 days of your application. Also includes supplementary schedules from the last 3 fiscal years. And your current projected financial statements got to include current and detailed 1-year projections of income and finances, and attach written explanation as to how you expect to achieve this, projections. They want you to have a business certificate license, like your original business license or certificate of doing business. If your business is a corporation, stamp with your corporate seal on the SBA loan application form as well. And they want you to have a loan application.
So let's break that down. So if you're like a general contractor, they want to see your GC license. If you're a plumber, they want to see your plumber's license. If you're a landscaper, they want to see your landscape or your occupational license. Anything that requires a license, they want to be able to see that. So this just isn't for real estate. This is for any business,
conventional finance,
that you work for conventional finance.
And look at that. They also want your income tax returns. They want resumes. I mean,
many times that we put together a business plan,
the
bank still said no.
Personal background information. They want your business credit report. Like, they want everything. They want you to break down your tax returns and your business overview and history. And I mean, I'm not going to go into each and every little thing, but as you can see, they want all of this. They want leases, bank statements, license, loan application, proof of collateral. They want all of that when you try to get conventional financing. Who's doing conventional financing?
No, that's a ton of stuff. I mean, if you're starting out as a small business, half of that stuff, or probably you don't even have established yet. You're trying to build up your cash flow. You're trying to build up your business. And that's why businesses fail in the first 2 years, because they can't get access to the capital that they need to grow their company.
Yeah, you don't got the collateral, you don't got the cash flow, and you don't got the credit. You're just starting out.
Exactly.
So conventional would not be the way to go. I mean, it's great news. There are a lot of funding options outside of these conventional banks and SBA loans. Alternative financing is one of the most popular options available, and you can even get business credit regardless of your personal situation. So, you got to be creative. So I'm going to go over the alternative business financing that, you guys can qualify. So most alternative sources will lend you money based on your business strengths. So if you have strength, you can get approved. So business financing is based on the business strength. And there are the 3 C's of lending. Either you got the cash flow, the cash flow coming in, you got the collateral like equipment or like trucks or real estate, or you have good personal credit or good business credit. You got to have at least one of these 3 things to get financing.
Yes, sir.
Let's talk about cash flow financing. Oh, what happened? So cash flow financing is one of the most popular types of business. So most ads relating to getting business credit financing with bad credit and no startups is a form of cash flow financing. So you guys see all those things going on your timeline saying get these business loans. They'll do it based off, how much money you have in your bank account. They're like merchant advances, and they want to know it's based off of your business revenue. So if your business does $10,000 a month, you'll qualify just off your bank statements only, and you don't have to worry about, using credit for that. And the qualifications for that, you just need to show 6 months of your business bank statements and merchant statements. And those bank statements must reflect your business make over $120,000 in annual revenue, or about $10,000 a month. So you can also get a merchant advance with 5,000 in credit card revenue monthly. Those are easy to get if your business is doing the money. You got to be at least 1 year in business to qualify, and you need to have more than 10 transactions or deposit per month in your bank account. And you can't have no more than 10, non-sufficient funds.
Look, so look, as you're starting out a small business, look, we all know you're gonna have some NSFs, right? You trying to take Peter to pay Paul, you're trying to pay your employees, you're trying to make sure that you keep the business running, but just make sure you keep an eye on that and you don't get that many. You want to make sure that you try to get as minimal as possible.
Okay. And then you also want to make sure you have some sort of balance left at the end of the month. You don't want to go negative, or else you won't be able to qualify for these. Now, in the cash flow financing, you can get short-term loans of 6 to 18 months. You can get loan amounts between 10,000 and up to 500K. The loan amount equals to 8 to 12% of your annual revenue. Rates are between 10 to 45%, in the interest rate range, and you can get accepted with a 500 credit score, and you don't need any collateral to qualify for these. So that's why these are a lot of popular.
Way different from the banks.
Yeah, way different. And a lot of people qualify for this. If your business is doing this and you're able to get it, this is something you may be able to get into, do like a weekly payment, and as your cash flow start coming in, this is something that you can pay off.
So let's talk about that. So if you are say a bar owner, if you are a contractor and you have invoice where people say they'll pay you 30, 60, 90 days out.
Landscaping.
If you're a landscaper and you have
plumbers.
You have yearly contracts. These are things that you can apply for with these types of loans and get your money now so that you can continue to grow and move your business forward.
And if your credit isn't good, it doesn't matter because it's based off the cash flow of your company.
Correct.
So the benefits with this is personal credit is a big factor in qualifying. If you're not currently in trouble now, such as being in a bankruptcy or having a recent judgment or liens, you're good to go. You can get your money super fast. Some people do it in a day. Some people do it in 2 days. You can get it up to 72 hours. And approval is easy. It's just a quick bank statement review, or some of the companies out here now, you log in and you merge your bank account with it. It'll go through your bank account and it'll tell you, hey, you got approved for $10,000. This is your payment if you want to do it with these terms. If you accept it, there's a soft pull in the beginning. If you accept it, then it may be a hard pull or it may not. Just depends on the company you deal with.
I'm just answering the comments.
Okay. So you can easily renew your advance to get, I don't want to restart now. No, restart later. So you can easily renew your advance and get more money within 24 to 48 hours with a review of 2 months bank statements once you pay down 50% of your initial advance. So basically with this, use your bank, they use your bank statement, you qualify. Say you get $10,000 and you set up on a plan and you're paying that. The only thing is these will be paid either daily. Some of them let you pay them daily. Some of them let you pay them weekly. But it's going to come out of your bank account. That's why they want you to connect your bank account to their software, because they're going to
daily, weekly, or monthly
automatically take it out of your bank account. I prefer monthly. So for me, I really don't kind of like these type of financing. However, if I knew I was doing like a fix and flip and I needed 50,000 real quick, and I know I'm gonna be out of my flip in the next 30 to 45 days, I would take this, use it, do what I need to do, sell my house or refinance whatever I'm doing, and I'll pay it off.
Yeah, if you're a contractor and you need that quick 20 to finish that job to get you to that 50, this does it for you.
Yeah, but daily loans though,
But I wouldn't recommend these unless you guys actually need them. You need to make sure you have the revenue to cover these.
Yeah, if you're generating the revenue, then yes. If you're not, then don't even look at those. Let's keep it going. So let's talk about collateral-based financing. So accepted collateral is accounts receivables, stocks, bonds, and other securities, inventory, purchase orders, equipment, 401ks, and real estate. So these are all be under collateral, loans that you can get. So where did it go?
There you go.
So account receivable factoring, up to 80% of receivables is forwarded. You got to be 1 year in business and must be receivables from another business or the government. And the rates are pretty low with these. So look, rates are 1.2% to 5%. So that's a positive with these type of loans.
Yeah, so any accounts receivable, and that's definitely like stuff like if you have a landscape company or some kind of contracting company, and people are paying you 60, 90 days, 120 days, because sometimes you have to invoice them that way in order to get the contract. Or I know when we used to own a commercial landscape company, we used to do work for the city, or the county, or the housing authority, and they pay, 30, 60 days. But if you have a contract with these people and you can prove your paperwork, they would lend you this money all day. And that way you can keep your business thriving, keep your business growing, and helping you get to the next level.
So security-based lines of credit are between 70 to 90% LTV of the stock value. Rates are as low as 2 to 3%. They'll give you a working capital line of credit, and challenge personal credit is okay. Then you got inventory loans. So the minimum inventory loan amount is $150,000. General loan to value cost is 50%. So inventory value will have to be $300,000 plus. It's no lump together inventory like office equipment. Rates are normally 2% monthly on an outstanding loan balance. And examples of companies that might qualify include a factory or a retail store. So, like the inventory from retail stores.
Yep.
And the rates are pretty low with that too.
Yeah, you might own a store and you have to keep a lot of inventory in order for people to come through and purchase. Like this time of year, maybe you needed a nice big line so you could get all your Christmas stuff in, so people could come into your store and purchase during the holidays.
Or you run some of that on Shopify. Think about that, on Amazon, or those type of things.
Correct.
Purchase order financing. You can get between $5,000 and $500,000, and you can get up to 95% of your existing purchase orders advance. You'll be issued a letter of credit. 401k financing. 401k or IRAs can be used. You can get up to 100% financing. Rates are usually less than 5%. And you are basically investing your 401k into your own business instead of buying stocks in other business. There are no tax ramifications based on proven IRS strategies.
So talk to your IRA or your account people.
Yeah, but this is a golden nugget here, because with an IRA, you invest. They tax you on certain things. They tax you on whether you pull it out, and you might not get taxed. Put it back in.
You can leave your money in your retirement and borrow against it to start a small business, to fund your small business, and so forth. So this is definitely a good avenue if you have a retirement account built up.
Then you got commercial real estate financing. So between $75,000 and $20 million are the loan amounts. You can get up to 55% loan to value for refinances. They're normally 20 to 30-year loans. Rates are between 4 to 8%. You will need a 650 FICO score for approval, and conventional and SBA 504 loans are available.
Just so everybody knows, we're going to do a little Q&A at the end. So go ahead.
All right. So credit-based, my favorite. Credit-based financing. So this is what I really show people how to get: unsecured business credit cards. Approval amounts are normally between $10,000 to $150,000. It does.
Yes, they are.
It does business credit reporting. Excellent personal credit will open revolving credit, low inquiries, and utilization under 30%. So sometimes if you actually have good credit, a 680 or better credit score, you have low inquiries and your utilization is low, you can actually leverage your personal credit to build up your business credit. Whatever your highest dollar amount that you have on your personal credit in a credit card, you can get 5 to 10 times that on a business credit card.
If you're set up correctly.
Well, no, yeah, you have to be set up correctly, but that's kind of like the cheat code. That's a cheat code for you. Approval amounts are similar to current limits. You can get between 0 to 25% APR. A lot of the business cards are going to give you 0% for 6 to 18 months. And then the fee is like 9 to 12%. So it's companies out here that will actually look at your business, look at your personal credit, and come up with a strategy that shows you, okay, you could qualify for this. We can get you this many. We can stack these many cards, get you 5 cards up to 150,000, but you got to pay our fee, and our fee is between 9 to 12%.
We'll show you how to do that.
And you can also use credit partners. So say your credit is crappy. Say my credit is crappy, but he got the great credit. This is my credit partner. I'm going to leverage his credit to build out my business. See how you do that? It's going to cost me. So basically, my favorite one is basically the unsecured business credit cards and lines of credit. And we're doing these presentations to show you that there are many different ways that you can get different types of loans without going the conventional and SBA route. If you can go the SBA and conventional route, it is good to go SBA because they will give you low interest rates with low payments. But for people that can't, there are other alternatives. So if you want to know how to get these type of loans, if you want to know how to set up your business properly, click the link below down on the tab
In the chat, yeah.
in the chat, and you know, we can get on a call and we can come up with a business strategy, and I can, you know, go over some things on how we can help you guys out. So if you have any questions, were there any questions?
Well, I'm sure there'll be some, but let me just say this too, guys, because when we went through trying to get these bank financing, credit was good, business plan was on fleek, but it was still an issue with them getting approved because there's so many little things that you have to know, the hacks in order to get it. That's why the unsecured business lines and unsecured business credit cards are definitely the way, if you have good credit, that you can hack the system, like she was saying, and get immediately in there.
And let's just say you don't have good credit. Let's just say you can't use your personal credit. You could still get business credit with just your business once you set it up properly. It may take you a little longer. It might take you 4 to 6 months, but once you get your business credit set up right, oh my gosh, you can leverage that to do all kinds of things. And I will show you all the tricks of the trade on where you need to have things, who you need to apply to, who gives you this amount, what do you need to have on your business credit reports in order to qualify to go to the next tiers. Like, I mean, I can show you guys all of that. So if you're interested in learning how to do this, there's a free consultation link in the chat. Go ahead and click on that and set up a call. If you're ready to sign up to learn how to set your business up properly, I have my business setup course that is on sale right now for the holidays. You can click on that and sign up for that as well.
Like $99. We like giving that thing.
Yeah, it's $99 because I want more people to know how to set it up right. A lot of people, you know, I have a lot of friends and a lot of family that have a done score and they have maybe 1 to 2 things, but they keep getting denied because they're missing other key aspects of building business credit. They're missing small little tweaks on what's getting them declined. And then once I show them what to do, they can walk into Sam's Club and get a business MasterCard with a $12,000 credit limit because they couldn't get it before, just from one hack without a personal guarantee.
No, just power, people. No, just power.
So it definitely is. So if that's all the questions.
All right, you want to answer some questions here? All right, so let's start here. I don't know how they set the bar so high when you're just starting out.
Because they set it so high because it's for people who are going to figure it out and learn how to actually get it done. If you really want to set your business credit up, aren't you going to research? Aren't you going to figure out? Aren't you going to go out here? Look, if somebody told me that they can help me get $150,000 in the next 6 months, I don't care how much it costs. Sign me up, boss. The problem with it, most people are scared to lose $100.
Yeah.
Billionaires and millionaires billionaires lose millions.
Yeah.
Millionaires lose hundreds of thousands. We can't be scared to lose a couple of little dollars to learn.
And they invest in themselves and their education to figure out the solutions to their problems. And that's one of the main things that's so important when you're going through and you're learning all about business credit. Invest in yourself. Invest, if it's not with us, invest in a course, invest in some knowledge, read some books, find out what you don't know, because what you don't know is what's hurting you. All right. Let's see what else we got here. What type of merchants?
I'll give you some of those merchants, Mike.
Ask what type of merchants?
I'll let you know the merchants. You probably don't want to mess with merchants right now. I know me and you got a call coming up here in the next week. I'm going to tailor something specific to you that would be better than a merchant.
Who's specific? That's one of our coaching students. Okay. All right. Let's see. Let's see what else we have here. Kate says daily pay loans are bears. Yes,
they are. I hate them. I don't do the daily. Like if I can't pay it in monthly.
Yeah, I wouldn't recommend them unless you absolutely need them to move your business forward.
Yeah, you got to be specific with that strategy. If you're going to use those, you have to be specific. You got to have a certain amount of money that's coming in. You can afford that. I don't really like the daily loans. Monthly is my thing.
All right, so that's pretty much all the questions. So, hey guys, we're just going to open it up. If you have any questions, comments that you'd like to ask, now is the time. Get this free information. Drop a question in the chat so we can answer them for you. We'd love some feedback. Go ahead and smash the like button. Let's smash the heart button. Make sure you subscribe to our Facebook and Instagram page. We'd really appreciate it.
Fun for Life Business Academy is our Facebook group page. And then we also have our YouTube, and we also have a Fun for Life business page on Facebook as well. We have our Instagram, but there's some issue going on with Instagram. But once it's back up, Once it's back up, you can go on Instagram at Fun for Life as well.
Our social media team, VAs, will handle that.
But if you do have any questions and this video is over, and you guys are seeing this video later, you're watching the replay, still go ahead and post your question in the chat. And
Yeah, we'll go back and answer all of them.
Luigi and Arnold, you know, our great, awesome team will get in there and answer the questions for you. So that's it for today. I look forward to seeing you guys next Wednesday on our next topic. And feel free to reach out if you need anything.
All right, take care. Comb your hair. Catch man up.
Comb your hair. Bye, y'all.